we're moving along pretty good. In July, we had a little bit of a dip over the 4th of July weekend. Last week, we did 75 million in new pending sales. That's down a little bit from the 80 to 90 million that we were seeing most of last year, but we're still seeing houses. Desirable homes in good locations are selling in multiple offers, as long as they're priced well. You know, last week, Diane and I attended, and I think there was a couple managers that attended the Broker Owner Manager Retreat for the Western region. We have a new Western Vice President, Ben Fairfield, and he had a really informative presentation. I am going to share a couple of the slides that he had. We have about 6 slides, so I'm going to go relatively quickly, but these will be available for you guys to download and use with your clients on the portal after the meeting. Let's take a look. The first slide is mortgage interest rates, and we've seen them bounce around. They spiked up kind of in May and June, and they've kind of mellowed back out a little bit. There are some people that think interest rates may reach 8%. I don't know if they're really going to reach 8%. I think more like 6.5% to 7%. Anahe, you want to chime in on where your prediction of interest rates and where they're going to end up?
You know, I left my crystal ball at home. I don't have it with me, guys. I'm so sorry. It's funny because we were on a call earlier this morning and they were talking about, as the feds raise the Fed rate, that doesn't necessarily mean mortgage rates are going to continue to go up. This is a really tricky dance. And so, yeah, James, we may not see it go much higher. We actually, even with the feds raising the rates, later this month, they're saying, it might be upwards of 0.75%. It might be 1% that they raise it. People are going to start saving because that means you're going to get more money on your interest in the bank. And so we may not see mortgage rates need to continue to go up. So it's kind of up in the air right now.
That's good news. Thanks, Anahe. The big question I get is, are we going to see a housing crash? Are we in a bubble? Look at this slide. A correction is a decline of 10% or greater in the price of a security asset or financial market. And this is a forecast of through the end of the year, through the end of this year. They interviewed Freddie, Fannie, CoreLogic, NAR, the Mortgage Bankers Association, and the consensus is we're going to come down from where we are now, but we're going to end up with a year nationwide with about a 9% appreciation across the housing market. So the next slide we have, this was really interesting, and I was talking to one of our agents, and I had mentioned this, and Stephen Thomas had also mentioned this, and I finally got my hands on the slide. Recession doesn't equal a housing crisis. So you can see over the last 6 recessions, there's only 2 where the housing market corrected, and that was in the early 90s. Remember that, Diane? And then, of course, the financial crisis in 2007-8, we saw a significant decline. If you go to the next couple slides, existing home sales, and then the next slide is the pending home sales. I like the pending home sales. That's what we track company-wide. We're seeing pending home sales, so that's the amount of homes. We're seeing about 10% less homes in a pending status from a year ago. So, but you got to understand, we're down from a very hot, incredibly robust real estate market of last year. So you got to put it in context, and a 10% decline in the number of units is not that significant coming off of a red hot year. We're still on track to sell 5.6 million homes nationwide this year. If you go to the next slide, we've seen an incredible amount of appreciation over the last 2.5 years. In most areas, 40 to 50% increase in prices was normal. And if things do come down a little bit, we'll still end up with a positive appreciation for the year. We need to let the steam off of what we were seeing last year. It couldn't exist much longer. And months supply of inventory. All that being said, the market is dictated by supply and demand, and we're still at an incredibly low supply of inventory. We're right around just under 3 months supply of inventory. And remember, guys, a balanced market is right around 6 months supply of inventory. So we have a long way to go. Keep those listings coming. And I want to go back to that second slide I show, price appreciation, and use this. Print it out, use it. I think there's a lot of buyers that feel like the market's going to crash. This may help you get buyers that are on the fence, make them jump into the market.